Shares of Disney up about 1% right now. The company came out with its numbers after the close of trading yesterday. And of course, the one that is getting the most attention, the Disney Plus subscribers, 73.7 million. Our Dan Roberts watches this company. That number getting a lot of attention, but the rest of the numbers are not so great.
The rest of the numbers were awful, Julie. And even though we expected that and we knew the pandemic has hit this company hard, I think it's still staggering and that we should go through them. And the idea that the stock is up right now because of Disney Plus is a remarkable sign that investors are finally buying into the idea that streaming is the future of the company. I mean, we knew that parks had been hit, but let's just say here, Disney swung to a loss in Q4 of about $700 million, also lost money for the year overall, $2.8 billion. The studio entertainment division revenue fell by 60% year over year. I mean, a lot in this earnings report was very, very bad. Now we have the Disney Plus number, 73.7 million. I would also zoom out and bring attention to the fact that between Disney's 3 streaming platforms now, Disney Plus, Hulu, and ESPN Plus, the company has 120.6 million paying subscribers. Very interesting, especially since 3 years ago, Disney didn't have 2 of those 3 platforms. They're brand new within the last 3 years. Of course, Disney Plus just launched 1 year ago. So very fast to amass those kind of numbers. And I'd also point to this. I know it's not apples to apples, but that 73.7 million number for Disney Plus, that's a global number, although it's mostly US. That's now equal to Netflix's US subscribers. Netflix has 73 million US subscribers. Of course, globally, 192 million. But safe to say that if you add those 3 platforms, Disney is kind of breathing down Netflix's neck here. And as you guys know, that's not to say, oh, watch out Netflix. I mean, I'm very bullish on both.
Dan, obviously investors have had this pivot, telegraphed for them for some time. So it's not surprising that the company is now going all in on the streaming service that lose a lot of money. But, as you note, I do sort of wonder at some level if the Disney investor who was buying the extremely profitable movie business and parks business and the cable networks business, if they're not whistling through the graveyard a bit at what's happening over on the cable side. I mean, Bob Chapek said something very interesting about the sports rights deals yesterday. He said, we'll do them as long as they're in shareholder interests. He didn't say we love the NBA and we'll buy it at any cost. I mean, you would never do that in a negotiation, but he's very clearly saying that part of the business is a big problem. That's where a lot of the profit came from. And they still haven't exactly sorted out, in my opinion, how they're going to get out of that.
Well, there's something very interesting that I want to highlight. As you mentioned, studio entertainment fell big. That's movies. But actually, interestingly, almost quietly, media networks did okay in 2020. Media networks, the revenue rose about 14%. Profit was up just barely. So not a total disaster, but you're right. I mean, if the company is publicly reorganizing to shift towards streaming platforms, well, what does that mean for paying up for live sports rights? And we know that ESPN just cut a number of jobs over at the parks. By the way, they just laid off equity cast members. That's actors and performers at the parks. That's another thing that you look at that. The optics of that weren't great, considering that back in August, Disney executives had their pandemic pay cuts reinstated and their bonuses reinstated. So, boy, there's a lot at this company that is very alarming because of the pandemic. And by the way, the pandemic is going to continue to weigh on this company in 2021. The company estimates that the overall in 2020 cost of COVID-19 was $7 billion. It's a huge number. So, remember that the parks previously were the profit engine of Disney. Even as people talked about Disney Plus, oh, so exciting, the parks are the profit engine. So what does that mean moving forward, especially since, you can get all excited about a vaccine, but even once the pandemic ends, does that instantly flip the switch back and suddenly the parks are flooded again? I don't think so. So it's fair of you to bring up the idea that, as I've written about today, it's sort of remarkable that the stock is up just on the excitement about streaming numbers. And as you also mentioned, Disney Plus still losing money because of the costs associated with making original content for Disney Plus. Worth noting also, Netflix gets a lot more revenue per month per subscriber than Disney Plus and ESPN Plus get per subscriber.